Sansera Engineering na Group CEO B.R. Preetham જોડાઈ ચૂક્યા છે. Hi sir, thanks very much for joining in. Let me start with the overall business model that you operate into. I believe you have been operating into two segments basically, the automotive as well as the non-automotive. Can you highlight me with some of the details, how much revenue contribution comes from which segment, and regarding the demand condition, how has that been since the second wave? Because we have been witnessing some of the kind of disruptions in the industry. A quick note from your side.
Good afternoon, Aditi. Thank you for having me on your show. So just coming to the first of your question, in the FY21, about 88% of our revenue came from automotive segment, and about 12% came from the non-automotive segment. And in the automotive segment, about 40% from motorcycles, about 24% from passenger vehicles, 13% from commercial vehicles, and about 10% from the scooters. As far as the demand profile is concerned, as you are aware, even during the last 2 years when the situation was very, very tough, we have outperformed the market significantly and we have grown well. And, with our new product additions, addition of our customers, addition of, new segments, and also increase in share of business, we have a strong growth projection for this current year as well. And this is, going well as of now.
Agreed, sir. You have a strong clientele as well. I actually wanted to understand how much the top 10 clients contribute to overall your revenues, plus the export market scenario, because you nearly have 65% of revenue contribution from India, and the other is from Europe and US. How is that working on with? Are you planning to change this kind of mix geography-wise, if there are any plans? Because as we are aware, it is a kind of OFS, and so fresh money isn't flowing into directly company. So I wanted to understand the immediate targets that you are setting up for, post-listing.
Yes, as you rightly said, about 65% of our revenue comes from supplies to India, and about 35% of our revenue supplies outside India. This also includes, revenue generated from our plant in Sweden. And, while we are growing both the domestic as well as the export business, I do not see a very big change or shift in this mix. Going forward, it could only, go positive towards export by a couple of percentages in the midterm. We have a very, very strong customer relationship. As you are aware that we have been, having almost about 30 plus years with our Maruti, 25 plus years with Bajaj and Yamaha, and a lot of export customers also are very strong. And our business is continuing to grow with all our top customers, both, product wise and in share of business wise. It will continue to expand.
Agreed. Okay, agreed, sir. Two more things I wanted to discuss on was the kind of debt structure, because in FY21 also you have been constantly improving on that side. For FY22, what are the targets? How much would it be serviced down furthermore? Plus the kind of opportunities in the EV segment, because we have been witnessing a constant translation towards that. And I did read one of your articles where you suggested that you have to monitor a constant shift that has been kind of having in the industry itself. How would you opting on that front, and what are your plans going ahead?
As you are rightly pointed out, at least in the two-wheeler sector, in the scooter segment, the transition has started to happen into the EV. While only about 6% of our overall business is dependent on engine components for scooters, but we have already secured business for supplying for electric scooters, both for the new age startup as well as the conventional OEMs who are getting into this. Apart from this, we are already into, we have got businesses from hybrid passenger vehicle car also. So the journey into EV sector has already started. While most of our capacities are fully fungible, which can be used for either ICE or EV components. So we see this EV transition as more of an opportunity rather than a threat. And as far as the debt is concerned, yes, you are right. Even during the last year, our debt came down from the previous year, and with the strong growth prospects, we, as defined in our RHP, we are going to invest close to about 250 crores this year, and most of it will be funded by the internal accruals. We don't see any big change in our debt structure, but debt equity ratios will further get improved.
Okay, agreed. And the last thing about margins, because we have been witnessing a quite volatile scenario for kind of the industry players when it comes to the raw material pricing scenario as of now. The global pricing has also been a bit volatile. How would that be maintained?
Yeah, I mean, the commodity prices, if I have to come to the steel prices, in domestic segment, it's a complete pass-through. So it would not have any material impact on our business. But, with a better utilization and as our new products introduction is also growing strongly, as we have consistently performed better than the industry in all these years, including the last 2 years where it was the very tough for the industry, we are very confident of improving our margin profile in the coming years.
Mm-hmm.